Hello everybody, it's Financial Freedom. You watch this video now, and that means opportunity is knocking. Stock market opportunity. We're diving deep into the stock market, uncovering the hottest trends and handpicking the top stocks that should be on your radar this month. Whether you're a seasoned investor or just starting out, this video is your one-stop shop for making smart investment decisions. This is not financial advice. Always do your own research before investing. Alright, before we jump into the specific stocks, let's take a bird's-eye view of the market. It's essential to understand the broader context before diving into individual investments. It's mid-February 2025, and the market has been looking pretty darn good over the past year. We've seen consistent growth across various indices, reflecting a strong economic recovery. The Dow Jones Industrial Average is up by 4.7%, the S&P 500 is showing a 4% gain, and the tech-heavy Nasdaq Composite isn't far behind at 3.7%. These numbers indicate a healthy market environment. Now, past performance isn't a guarantee of future returns, but this upward trend definitely reflects a sense of optimism among investors. Analysts are cautiously optimistic but always advise vigilance. The economy is looking pretty robust, and that's always a good sign for the stock market. Consumer spending is up and businesses are reporting strong earnings, but remember, things can change quickly in the market. Volatility is an inherent part of investing, and it's crucial to be prepared for sudden shifts. That's why it's so important to stay informed, do your research, and not put all your eggs in one basket. Diversification is key. A well-diversified portfolio can help mitigate risks. Speaking of diversification, let's start exploring some promising sectors and specific stocks that are catching my eye this month. Keeping an eye on sector performance can provide valuable insights. First up, we've got the technology sector. This sector is always buzzing with innovation and potential. This sector has been a powerhouse for years, and 2025 is shaping up to be no different. The growth trajectory continues to be impressive. From artificial intelligence to cloud computing, the tech industry is constantly evolving, and that creates some exciting opportunities for investors. Staying ahead of these trends can be highly rewarding. First up on our list is a company you all know, Microsoft. Microsoft has been killing it lately, and they're not showing any signs of slowing down. Their diversified portfolio, which includes everything from cloud computing with Azure to gaming with Xbox, has been a recipe for success. And let's not forget about their push into artificial intelligence. Microsoft has been making some serious moves in the AI space, and that's a big deal. AI is the future, and Microsoft is positioning itself to be a major player. Microsoft isn't some small startup with a ton of volatility, it's a blue-chip stock, and that means it's generally considered to be less risky than smaller, more volatile companies. If you're looking for a relatively safe bet with solid growth potential, Microsoft is definitely worth considering. Let's move on to a company that's riding the wave of the future, Caterpillar. Caterpillar specializes in the installation of offshore wind turbines, and business is booming. As the world transitions away from fossil fuels and embraces cleaner energy sources like wind power, the demand for Caterpillar's services is only going to increase. They're basically the construction crews of the offshore wind farm world, and they're in high demand. Now, Caterpillar is a bit of a riskier play than Microsoft. They're a smaller company operating in a rapidly evolving industry. If you're looking for a way to invest in the future of energy, and you're comfortable with a little bit of risk, Caterpillar is definitely worth checking out. Alright, let's shift gears and talk about a company that's been around for a while but is still going strong, Hyster-Yale. They're one of the world's leading manufacturers of lift trucks and other material handling equipment, and they're seeing a surge in demand as the global economy recovers and supply chains adapt to the new normal. But here's the really interesting part. Hyster-Yale isn't just resting on its laurels, they're investing heavily in electrification and automation, which are two major trends shaping the future of manufacturing. They're developing electric lift trucks that are more efficient and environmentally friendly, and they're incorporating automation technologies to improve productivity and safety. If you're looking for a value play in a sector that's often overlooked, Hyster-Yale could be a smart addition to your portfolio. Let's talk about a company that needs no introduction. Amazon. Their stock price has been a bit volatile, and some analysts are questioning whether their best days are behind them. But here's the thing, Amazon is still Amazon. They have their hands in everything from e-commerce to cloud computing to entertainment, and they're constantly innovating and expanding into new markets. Sure, they face challenges, just like any other company, but they also have a massive asset base, a loyal customer base, and a CEO who's obsessed with growth. If you believe in their long-term growth potential, and you're willing to ride out some short-term volatility, Amazon could be a valuable addition to your portfolio. Next up, we're diving into the world of semiconductors with ASML Holding. They manufacture the advanced lithography machines that are used to make the chips that power everything from our smartphones to our cars. And here's the thing, the demand for semiconductors is only going up. We're living in an increasingly digital world, and that means we need more and more chips to power all our devices and infrastructure. ASML is basically the gatekeeper of this industry, and they're in a prime position to benefit from this trend. They're a high-growth company with a premium valuation. If you're looking for exposure to the semiconductor sector, and you're comfortable with a bit of risk, ASML could be a smart addition to your portfolio. Alright, let's switch gears again and talk about a company that's operating in a more traditional industry, Repsol. Repsol is a Spanish multinational energy company, and they're one of the biggest players in the oil and gas industry. They have a significant presence in over 30 countries and are involved in every aspect of the energy sector, from exploration and production to refining and marketing. Now, I know what you're thinking, oil and gas, isn't that like so 20th century? Well, it's a bit more complicated than that. Well, yes and no, the world is definitely moving towards cleaner energy sources, but oil and gas are still going to be a major part of the energy mix for decades to come. This transition is gradual and complex, involving many moving parts. And here's the thing, Repsol knows this. They are fully aware of the shifting landscape and are adapting accordingly. They're not burying their heads in the sand and pretending that the energy transition isn't happening. Instead, they are proactively planning for the future. They're actually investing heavily in renewable energy sources like wind and solar power. This is part of their broader strategy to diversify their energy portfolio. But they're also continuing to invest in their traditional oil and gas operations because they know that demand for these resources is still strong. Balancing both areas allows them to remain competitive and profitable. If you're looking for exposure to the energy sector and you're comfortable with a bit of risk, Repsol could be a smart addition to your portfolio. Their dual approach to energy makes them a unique player in the market. Let's talk about a company that's a little bit mysterious, a little bit controversial, but definitely intriguing, Palantir Technologies. Palantir specializes in big data analytics, and they provide software and services to governments and businesses around the world. Now, Palantir has been in the news a lot lately because of their work with government agencies like the CIA and the Department of Defense. But Palantir is also expanding their reach into the commercial sector, and they're working with companies in industries like finance, healthcare, and energy. Their software helps organizations make sense of massive amounts of data, identify patterns, and make better decisions. There's no denying that Palantir is a leader in the rapidly growing field of big data analytics. If you're looking for a high-risk, high-reward investment in a company that's at the forefront of technological innovation, Palantir could be worth considering. Let's shift gears back to the energy sector and talk about a company that's focused on clean energy solutions. Constellation Energy Corp. Constellation is the largest producer of carbon-free energy in the United States, and they're a major player in the nuclear power industry. Now, nuclear power has its critics, but there's no denying that it's a highly efficient and reliable source of carbon-free energy. And as the world transitions away from fossil fuels, nuclear power is likely to play an even bigger role in the energy mix of the future. Constellation is also investing in other clean energy technologies, like wind and solar power, and they're committed to helping their customers reduce their carbon footprints. They're basically a one-stop shop for clean energy solutions, and they're well-positioned to benefit from the growing demand for these services. If you're looking for exposure to the clean energy sector and you're comfortable with a bit of risk, Constellation could be a smart addition to your portfolio. Okay, so we've covered a lot of ground today, from tech giants to renewable energy pioneers to industrial powerhouses. Each of these sectors offers unique opportunities and challenges for investors. But before you rush out and start buying up all these stocks, let's take a step back and talk about some investment strategies and considerations. It's crucial to approach investing with a well-thought-out plan. Remember, investing isn't just about picking the right stocks. It's about managing risk, diversifying your portfolio, and having a solid plan in place. A balanced approach can help mitigate potential losses. First and foremost, never invest more than you can afford to lose. This is a fundamental rule that every investor should live by. The stock market can be volatile, and there's always the risk that you could lose some or all of your investment. Market conditions can change rapidly and unpredictably, so before you invest a single dollar, make sure you have a solid financial foundation in place. This includes having a clear understanding of your financial goals and risk tolerance. That means having an emergency fund, paying off high-interest debt, and investing for the long term. These steps can provide a safety net and help you stay focused on your investment goals. Speaking of the long term, it's important to remember that investing is a marathon, not a sprint. Patience and discipline are key to achieving sustained growth. Don't get caught up in the hype of short-term market fluctuations. These can be distracting and often lead to impulsive decisions. Instead, focus on identifying companies with strong fundamentals, solid track records, and long-term growth potential. This approach can help you build a resilient and profitable portfolio. So there you have it, guys. Your February 2025 watch list is served. From established giants like Microsoft and Amazon to up-and-coming players like Caterpillar and Palantir, there's something for every investor in this market. Just remember, investing isn't about getting rich quick. It's about building long-term wealth and achieving your financial goals. So do your research, invest wisely, and always remember to consult with a financial advisor before making any major investment decisions. Until next time, keep hustling and stay invested.